Steve again, and today I'd like to talk to you about down payment and what you're going to need for a down payment when you're acquiring a property in today's market. Things have changed a lot in the last couple of years now that the banks have gone under, a whole bunch of them, about 346 banks from what I remember at this point. And so what has happened is we've gone from a time period where things got extremely liberal, now back to a time period in history where things are back to what they were when I first started 25 years ago. Things are very conservative. Banks want to make sure that you can afford a property, that you can get into the property, and you can make your payments on time and things of that nature. So they're very conservative. So they require right now, as a minimum, under normal circumstances, 3.5% down on a down payment. So that's about $10,000. On 100,000, that's about $10,000, a little bit over $10,000 for a down payment. Now, there are some instances where we can get the seller to pay closing costs, and or we can use the money under a current tax rebate of $8,000 to be able to allow you to be able to get into your property for no money down. Understand there is what's called closing costs. And under closing costs, those are two components. There's down payment plus closing costs. Closing costs are things that have to be paid on behalf of people like myself, escrow, title, prepaid interest, monies that you have to have up front to be able to preserve and protect yourself when you close out your loan, too much cash reserve requirements, things of that nature that enable the bank to feel comfortable in knowing that you're going to be able to make your payment and be able to move along your way here. So there's certain costs, and I basically rounded off, it's 3.5% down for down payment, and figure about 3%, up to 3% for closing costs. So if you have a $100,000 property, 3% is $9 grand. If we can get the seller to pay that 3%, which most often we can, depending on whom we're talking to, how we negotiate, what bank or REO company or short sale provider or independent person wants to sell the property, we can negotiate having them pay those closing costs on your behalf. So all you have to do is come up with the 3.5% under FHA guidelines. Now, under Freddie Mac and Fannie Mae, we can work with you under some of those programs to be able to get in for 3.5% and put yourself in a position where they're a little bit different in their guidelines against the FHA guidelines. The FHA guidelines are more liberal, I'll call it. They're more, what's the term I want to use? It's just easy on their approach. So we can do a lot of different things with FHA that we can't do with the Freddie Mac Fannie Mae guidelines. So that's why you're hearing a lot about people going into FHA and how much it's easier to get approved under FHA. FHA has what's called a delegated underwriting solution. And what that basically means is in the last 15, 20 years, we've had an instance where because of computers, we've been able to submit a person's application, all their documentation, and have an electronic system basically evaluate it and give us an answer, yay or nay. Sometimes if the system thinks that you could possibly qualify, but they've got a little issue with one or two issues about your file, they'll do what's called a refer. And what that basically means is they're sending the file over to a physical underwriter, a physical person called an underwriter, that basically will look at your file, will look at the approval, and will basically come back with a verbal commitment saying that if you meet certain guidelines, and in other words, out of the box guidelines, we'll go ahead and approve the file. If you can, and that's where negotiations come in, and we get that happening all the time. Now, as far as ratios, you want to keep your ratios for qualifying at around 43% maximum. What that means basically is a maximum of 43% of your income going towards your housing payment plus your monthly expenses. No more that figure, 43% of your income, not exceeding 43% of the 100% you get of your monthly check or your weekly check. Okay, so we'll run those calculations and get you set up under that. I just want to kind of give you a generic idea. But as far as a down payment, if you want to do a VA and you're a veteran, we can do a VA loan with no money down, get the seller to pay closing costs, and so your cost of getting into a property would be minimal. You may have to pay for an appraisal and a credit report. Now, I should also tell you about credit reports and appraisals too. In the old days, I'll call them, for many, many years, up until about a year ago, we were in a situation where we basically could order an appraisal on our own behalf, on your behalf, should I say, as a loan officer, as a mortgage company. We would go out and get an appraisal that we knew and have them go out and do the appraisal for you. Now that was an independent person, they did the appraisal. Nowadays there are what's called appraisal farms. Federal law changed because of things that had happened in the collapse of the banking industry. And now we have to send your appraisal through what's called an appraisal farm, which is basically a clearinghouse, and that can take a little while. So usually it can take 10 to 15 days, 5 days to get your appraisal completed. And the other thing is you have to pay for your appraisal on your own behalf, because the banks want to make sure that you don't get screwed. So they're making sure that you pay for the appraisal using a credit card, a debit card, or a check to be able to show proof that you can that you're basically paying for the appraisal, that you're not being overcharged. And it's the same thing with credit reports. In the old days, we could pull up a credit report, and what was happening in the industry is a lot of guys, a credit report costs $19 to pull up all three bureaus, see what your situation is, see what your credit score is, see what your debt-to-income ratios are, all those kinds of things. And in the old days, there were a lot of guys and gals out there in the mortgage industry charging people $30, $40 for a credit report when it actually cost them only, $19. So what they've done in the industry is we have things that are automated. We can pull your credit report, but we have to basically take your credit card, your Visa MasterCard or whatever, and we have to run the credit report under your name, therefore using your card. And that basically protects you as well. So just want to let you know that. And so you know how to, basically what you're going to need. If you don't have any money right now, don't fret, because give us a call anyway, because we'll show you how you can find money and get money. There's also you can use gift money from a relative, and I'll show you how to do that, how you can use gift money for your down payment and get the closing costs paid by a seller. So there's a lot of different solutions, but you just have to give us a call and let us know what your situation is, and then we can help you strategize and get you, fully loan approved up front, get you on the pathway, and go from there. So enjoy your day. I guess this is it for this particular video, and I'll look forward to talking to you in the real near future. Okay?